Hi, this is Mike with PriceActionTradingSystem.com. This is Thursday, December the 1st, and I'm going to show you how I get prepared every morning. When you first come in, it's critically important that you do your chart analysis before you ever think about trading. You got to find your support and your resistance, and you got to find your trend line. Remember, I always find my trend lines off the first two swings of the overnight, and that's down here. The trend's working up. We're opening up right here on this bar. So this is the current trend working up. We had a little steep overnight trend, but it's really a trading range. We fell out the top, we fell out the bottom. But here's the trend working up at this point. So we're only looking for longs right now. We got our resistance up here. I usually use the closes. So there's your close. You could have drawn it right there if you wanted, but that didn't really cover it good. I guess you could have drawn it right there. But I actually drew mine up here because that's the high. And the reason I didn't come down here to this low is because the trend is working up, and I used this double bottom. It was a nice double bottom here, and I figured we were going to try to test that. But here's the open. We had the trend line coming up. Remember what the rules tell us. The rules tell us that on a trend line break, the trend is up, so we can't go short until there's been a retest. So we're not looking for any shorts right here. All we're looking for is longs. And in a trading range, we can't go long unless we get a chance to buy low or buy a breakout pullback long. So there's only two options for entering right here: buying down here at the low, or buying on a breakout pullback long up here. Because we're looking for longs. The rule says no short. So let's follow it bar by bar. You see prices are going higher. And look, they turn right there at the same place again. They're trying it again. Nope. And look, they immediately sell off. They come down here. They bounce off the low again. They bounce it off of that bar. Still, now all this overlap. No, see, nothing's happening. There's no reason to get trapped in this stuff. Just stay out and wait for the trap. And then you take advantage of the trap instead of getting taken advantage of. And there, finally, we broke. We had a close that's lower than any other close. Now, if prices reverse here, we could go long right there. And we've also, that's good enough to be a strong double bottom there. This is good enough to be a failed breakout lower, because if you use the closes, that's the first close that's ever closed down there. So if prices were to turn up here, there's enough room to scalp out the top. So this is the very first trade that's set up today, right there. So that's the only trade so far. So we go long right there. Yep, we're entered. Boom, we're already out right there. We scalped out. And I probably would have scalped out on this in full, because even if prices go higher, we need a breakout pullback entry long. Anything that breaks out of here is likely to fail at first. There we are. We're finally breaking out. And look, prices reverse. They're trying to go lower. They try to go lower one more time, and they reverse back up. Now we got a nice bullish reversal bar. This is the second opportunity to go long. If prices break above that bar, I want to be long with it. And look what happened. There they go. And look at that. We're just taking off. There we go. And I would have been looking to exit up here. I probably would have been reversed up here. And look what happens. We touch that line to the tick, and then prices, boom, sell off again. No reason to go short yet, because that's too big a bearish bars, too many overlapping bars. If I was going to go short, it would have been a naked short right there. But I don't teach that, because you got to really know what you're doing to do that. So forget I even said it. All right, there's your first bounce off the EMA. That's pretty close to a reversal bar. You could have gone long above that. Nothing wrong with it if you did, but it's not a great setup because it's too close to this double top. As you can see, it would have worked. And then look what happened. As soon as prices broke higher up here, all the smart traders that got long down here, they're taking their profits up here. Look, they've made 42. They've made 7 or 8 points on the way up. They're getting their money and going home. They're done for the day. All your smart traders are probably done. They probably made their 8 points on a dozen contracts, 10 contracts, and they're done. All right, here's another setup. Again, I wouldn't have taken it. It's too close to this high. We've had the trend line break. We've gone to a new high. And if you look right here, this is one leg up, and here's your second leg up. So we're getting too close to a second leg up. No reason to be going long. Until this line acts as support, we're still thinking shorts. And if you would have taken that long, it would have worked, but I wouldn't recommend it. And then look, instantly prices are selling off again. Still, the line didn't act as support. Prices got back through. We're still going lower. Still going lower. There's no reason to go short yet because this is the first chance to break below the EMA. We do have a lower high and a lower low, so if we get the right setup here, we could go short. Too many overlapping bars, can't go short, can't go long. You see what happens when prices break lower there, then they fail and trap everybody. Now they're headed up. And we still got resistance right here. I wouldn't have had this line in here yet. I just already got it on. And you see we touched that resistance and instantly turned down. Now you could have gone short right here. You wouldn't have had this line. You knew the resistance was here. This was a fair entry. I don't recommend it because of the 3 or 4 overlapping bars, but it would have worked. You can see you could have scalped out. And it would have been a good trade. Going lower. No reason to be going short down here because... And what I did, I copied this line and I drug it down here when I saw this low. And so now we've got our low side of the range and this is a high side. Now if we come back up somewhere up here, this is where we look for the short. You see how this is all overlapping? No reason to be going short. All they did was trap people right there again. Now here we go. Now we got a touch of the EMA and a reversal bar. There's your next trade. It's okay to go short right there. And look at that, man. Boom. Sells off. I would have looked to exit right down here, right in here somewhere. And look at there. Boom. And this is where you look for your trades. But look, let me show you something. Since 8:30 till 10 o'clock, we've only had 3 setups. Only 3 setups. And I'll get emails from you guys saying at 10 o'clock saying I'm 6 for 3 today or 3 for 6 today. And I'm like, how could you find 9 trades when there hadn't been any? And that's, you're over trading and that's why you're losing. You're entering in this stuff and you're trying to pick, you know, you're selling and buying and all the chop and you're wait for the, here's the rules right here. Trend days, buy pullbacks to the 21 bar EMA and the trend line. On range days, buy support and sell resistance. But here's a pullback to the EMA that I wouldn't have taken. Why wouldn't I take it? Because look, here's all this support. You got this support line, you got your trend channel line, and look, all it did was break through there and trap people. This turned down. This trade would have worked. Most of these will work, but being this close to support and that trend channel line, no way. And you see it didn't go much further. Tried it again, and then it reversed. But again, even this is the first break of the trend line, so we still can't go long. Look at all this overlap. The only reason I'm going short here is if we probably get a failed break higher. No way you can go low right here, even though we're looking for a retest. And you see what happened. Prices went out. Now we got a setup right there. There's a failed break higher out of that chop with a nice reversal bar. And boom, look at there. See how that just fell off? It really is that easy if you follow the rules. The rules say on trend days, buy pullbacks to the 21 bar EMA and trend line. On range days, buy, it should say buy support, not bull support, and sell resistance. Guys and gals, watch this video, study it, understand what I'm showing you here. If you don't understand the rules or know them, buy my manual. It's $100. Nobody else is going to teach you this stuff for $100, I promise you. Most people are going to charge you thousands of dollars and it's not going to be this good. But look one more time and let me show you this. From 8:30 open till noon time, there's 4 decent setups. There were probably a couple of longs down here, but you would have been counter trend trading, breaking the rules, and you probably would have got trapped. So there's for a rookie trader, a new guy, that's the only 4 trades you could have taken right there. And that's, so there's no way there's been 6 and 7 and 8 and 10 setups by noontime that when you guys send me your stuff saying I lost today. The reason you're losing is because you're not following the rules and you're not entering in the right place. So do your chart analysis first thing in the morning, find your support and resistance and find your trend line. And if you had these in here, at the very least, if you didn't do anything but sell up here and buy down here, you'd have made money today. And you could have had these 3 lines on your chart by 6 o'clock this morning, 2.5 hours before the market ever opened. So come in, do 15 or 20 minutes, back out on your chart, give yourself 15 or 20 minutes to look it over, figure out what's going on, and be ready when the market opens. So hopefully you see this. I'm going to wrap this up to keep the video short. This is Matt with PriceActionTradingSystem.com, and I'll see you next time.